2, 1. Welcome to the Capital Gains Tax Solutions podcast, where we believe most high net worth individuals and those who help them struggle with clarifying their capital gains tax deferral options. Not having a clear plan is the enemy, and using a proven tax deferral strategy, such as the Deferred Sales Trust, is the best way for you to grow your wealth. I'm your host, Brett Swarts, and each episode I am joined by some of the best real estate, wealth, financial minds in the world, where they share their ideas, deal stories, and inspiration. So together we can make complex tax deferral strategies simple and passive income plans achievable. Hey, I'm excited about our next guest. He is an expert in buying and selling on terms. He's an Amazon best-selling author of The New Rules of Real Estate Investing and co-host of the Smart Real Estate Coach podcast. He is partner, CEO, and coach at Smart Real Estate Coach. In September 2020, they'll be releasing a revised edition of Real Estate on Your Terms, which he will be co-authoring, and so much more. Please welcome to the show with me, Zachary Beach. Hey, Zachary, how you doing?
Brett, I'm good, my man. Thank you very much for having me on. I'm excited.
Excellent. Yeah, likewise. Would you give our listeners a little bit more about your story and your current focus?
Yeah, absolutely. So about 6 years ago, I entered the real estate investment space. Before that, I was a bartender and personal trainer. And as you can imagine, those two jobs per se don't match well together. I would be staying up real late at night and waking up really early in the morning. So I did that for about 4 to 5 years. And at one point in time, I was just getting really burnt out. So I actually went to my father-in-law, my business partner now, and said, hey, I'd love to jump into real estate. I have no idea if I'm going to like it or not, in all honesty, but it's going to be better than this. So I dove on in, jumped in with him, and fast forward now, I've done hundreds of deals, specifically in creative financing, lease options, owner financing, subject to type deals.
Fantastic. I can't wait to dive into that on the full interview. But during this little mini teaser interview, we're going to focus on one big topic, which is capital gains tax deferral. So Zach, what's the biggest frustration maybe you, a partner, or a friend has had, or a student when it comes to capital gains tax deferral options?
Yeah, I would say the biggest frustration, especially comes to my model, and this is probably the one downside when it comes to my model, as we don't use our own cash credit or investors' money. But when you buy property on a lease option, you don't have title to the property, which means that you can't get any of the tax benefits associated with controlling the property, even though you're contractually responsible for that house. So you don't get depreciation, you don't get any of that. Even if you put work into the property, you're not going to be able to help raise your basis. So, but when we go sell this property, of course, we're being constructed as more or less a dealer. So we still get hit with capital gains. So unfortunately, for that specific business niche, or one of the terms that we do, the biggest frustration is I wish that we had the ability to get the depreciation on that. And that's why I would say that our model now is focused more heavily on owner financing, so that way we do get all of that, because that's tens of thousands of dollars on every single property that we would save or make. So that'd be my biggest frustration.
Yeah, it's a big frustration to have. And also that dealer status, I believe, doesn't allow you to do the 1031 exchange either, right? So you just kind of got to pay it, and if it's short-term in nature as well, or am I wrong on that on the 1031?
We typically aren't doing 1031s in general. We're selling our property on rent to own, so they do typically happen within a 2 to 3 year window. So yeah, there's definitely getting hit on that short term. And I mean, it's part of the business model. Unfortunately, you pay the taxes because the liability is so low.
Mm-hmm. Got it. But could you do a 1031, just to clarify, if you wanted to, because you're holding past the year? Or is there a reason you're not doing a 1031? Do you need the capital for the next deal? Or walk us through just that understanding. I want to make sure I'm on the same page with you, because maybe it's different for different states. I'm in California. Sure.
We're typically not doing a 1031 exchange because we don't have ownership of the property. Mm-hmm. Gotcha. So in that status, we're doing a lease option. So we're not holding title. So we're not moving and rolling our investment into the next one. What I tend to see is, because we work in the single family world, if we were working more in the higher end multifamily, then I would say that that'd be a great strategy for us.
Excellent. Okay, great. That makes sense. And we're going to dive into more of that and for Zach's strategy here on the full interview. But in the meantime, Zach, for those who want to find out more about you, where's the best place for them to connect with you?
Yep, I'll give you 2 spots. So go to smartrealestatecoach.com and you can go ahead and watch our webinar. Or if you want to book a free strategy call with us, you go to smartrealestatecoach.com/action and we'll dive on in and we'll see if this is a good fit for your business and be able to implement this business model.
Beautiful. And if you're looking for a capital gains tax deferral options and clarity on your options, you can go to capitalgainstaxsolutions.com, or if you're a business professional, you can go to experttaxsecrets.com and find out if the Deferred Sales Trust is a good fit for you. With that, everybody, look for the full interview to drop here soon with Zachary Beach, and thank you so much for listening.